Motors out this morning also announcing that they will start producing an all-electric Corvette, which will be interesting. One of the reasons I buy a Corvette is so my car will be faster than everybody else's, but now it'll just be as fast as every other electric car out there. It'll just have a cool body shape to it. So,
you know how they pipe in the exhaust sounds to some automobiles?
Yeah.
What they'll do for the Corvette is they'll have a little essence hang up on the rearview mirror so it smells like burning oil and fuel.
It does. I will have to tell you, though, where we live in our house, where our house is, we live out in kind of almost the country.
East San Antonio?
Exactly. There's a very straight road not too far from our house.
Yeah.
And so every night at 2 a.m., right, there's cars out there, just gunning it and racing it down the street. And they're just as loud as they can be. I guess the one benefit is they can all go drag race up and down the street with electric cars and nobody will hear them. So it's
like the Jetsons.
Which I'll sleep better that way. So we'll see how it goes.
But what about ozone pollution from all those electric motors?
Yeah, well, that's what about all of the non-climate and earth-friendly problems of mining for all that stuff to build the batteries to begin with? That's a whole nother argument. People are going to figure out in about 10 years that wasn't such a great idea. Let's go back to drilling for oil. It was safer and cleaner. All right. Be right back after the break. That's a bit of disinformation for you. Don't go away. We'll come back. Got stuff to get into. Don't go away.
Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
How do the richest people in the world invest and protect their families? Richard Rosso and Danny Ratliff's next virtual Lunch and Learn on the truth about life insurance will show you how to insure your income, minimize your taxes, and protect your real estate. Thursday, May 12th at noon. The most important insurance policy you'll ever own is the one you'll have when you die. Register now for the Truth About Life Insurance Lunch and Learn at realinvestmentadvice.com. The Truth About Life Insurance with Ratliff and Rosso. Realinvestmentadvice.com.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
Our oldest daughter, every time she starts feeling bad, she starts going to Google and finding out what's wrong with herself. And, she comes downstairs, she goes, "Mom, I've got dysentery." What do you mean you have dysentery? Well, I have a fever, I'm nauseated, I've got cramps. It's like, no, that's you're
The Real Investment Show podcast. Same show, your schedule.
Sometimes access to too much information is not really a great thing either.
At realinvestmentadvice.com.
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. RealInvestmentAdvice.com. Click on the insurance tab.
Real Investment Show podcasts are now available from Stitcher Smart Radio at Stitcher.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. It's a quick and easy application. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The most important insurance policy you'll ever own is the one you'll have when you die. Richard Rosso and Danny Ratliff's next virtual Lunch and Learn on the truth about life insurance will show you how to insure your income and protect your real estate. Thursday, May 12th at noon. Register now for the truth about life insurance at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show this morning. So, Musk potential Twitter changes, an edit button, long needed. Long form tweets, probably not needed. Removing bots, definitely needed. So, we'll see what he gets changed. We'll see what comes along. So, a couple of things. Moving on. There's a lot of concern right now, and it was interesting as part of our conversation that we had in this past weekend's newsletter as well, is that below the surface of the market, there's actually been a pretty big bear market going. There's a lot of stocks that are down 20, 30, 40, 50, 60% from their peaks. And, that is normally what you would see during a more protracted bear market in the indexes, but you haven't seen that contraction in the index, and that's because money's been rotating very rapidly in the markets, but B, it's also been concentrated as money's kind of hiding in the large capitalization name stocks. And one of the problems that we may run into this summer is an ability to find opportunity. And the reason I say that is that the market rotation has been so rapid lately that now everything is pretty much overpriced in many areas. Staples, you're kind of, so if you think a bear market's coming, right, you would want to potentially hide in areas that typically do well during bear markets and recessions. And those are generally places like Staples, utilities, just kind of your dividend payers, real estate. The problem is that that's where money's been hiding already. And you take a look at companies like Procter & Gamble as an example, trading at 5 times price to sales. So very expensive. These are not value-oriented companies, and the problem that the market has gotten itself into is, and this is largely due to passive indexing, is that people go, well, I want to be in value because that'll help defend me from a downturn, and that's worked this year so far. So everybody goes buys value ETFs, and now all the underlying stocks in the ETF are very expensive. So as we move into a summer, if we do wind up in a bigger potential bear market, which is certainly possible. The Fed's hiking rates, tightening monetary policy. There's certainly that risk there. Don't want to discount that at all. But the problem is there's really not much place to hide in terms of the markets, except in bonds. Bonds have been completely beaten up. They're in a major bear market. In fact, that's the subject of our article on our website today. If you go to realinvestmentadvice.com, we're talking about why the bull market in bonds is set to return. And that's simply because those assets are in a major bear market, but not so much in a lot of the areas of the equity market. And even though some of these stocks have corrected 30, 40, 50%, they are cheaper in price, but they are not necessarily cheaper in value. And that's the other problem. So what will be important as we move into the summer? Look, and I'm not predicting that we're going to have, and I had this conversation yesterday with a gentleman, and he's convinced the market's going to go down another 30 or 40%. And that's certainly possible. We were talking about just a minute ago, talking about confirmation bias and, how we start reading stuff that only leads into our views. And you got to be careful with that because there are some really, really smart people, much smarter than I will ever hope to be, that are predicting very negative outcomes for markets. Jeremy Grantham, John Hussman, others. And these are astoundingly smart people. They just haven't been right in a very long time. And it's easy to get kind of sucked in to that area and forget that our job as investors is to manage money for what is available to us right now. We can have these very long-term negative prediction outcomes of markets, but it takes a very long time for those things to work out, and we can wind up missing out on a lot of opportunity in the market by waiting for that eventual decline. I'm writing a follow-up article to today's article for next week talking about this specific issue. The other problem is that when the next bear market comes, and it does come, right? Eventually, we have a real bear market. And you go, well, I'm going to sit in cash until we get that 50% drawdown in the markets. Okay, sounds good. And then when we get that 50% drawdown in the market, then I'm going to go buy everything. No, you won't. It sounds great. But this goes to the very notion of loss aversion. And this is what investors are dealing with right now. I'm scared of a market decline and I don't want to lose my money. So I will not invest in the markets because I don't want to lose my money. See, I'm avoiding loss that way. And that may seem smart for right now. I got it. Here's the problem though. You're worried about the market declining, so you won't invest. Okay. And then the market does decline. It goes down 20%. Aha, I was right. Goes down 30%. See, told you. I'm a genius. 40% down. I am incredibly smart. This market's going to go to zero. And see, the problem is that now you get yourself on the other side of the problem saying, okay, I have now avoided loss and I definitely don't want to get in now because this market's going to continue to go lower indefinitely. And so you don't get back in. And then the market begins to recover. And as the market begins to recover, then you go, okay, well, it's just, that's a reflexive bounce. And every time it's bounced before, it just goes lower. So I'm going to stay out. And then the market keeps going up. And then you say, okay, well, next time it pulls back to, the previous bottom and retest those lows, then I'll get in. And then it doesn't. And then it goes up more. And then, well, now the market's overvalued. So when it crashes again, I'll get in the next time. And you never get in. And look, and how do I know this is a true statement? Because we have people come to our office literally all the time that have been out of the market since 2009 for that very reason. And they're like, I'm all in cash. What do I do? How do I get back in the markets? The psychological behaviors of loss aversion are very difficult to break. And this is why it takes a process and a methodology to get into the markets and understand that once you're in, there is risk to the downside, but it doesn't mean that you have to absorb all that loss. You don't have to ride the markets down into the depths of despair, right? You can sell at any time. And this is going to be the problem that we go forward to because, see, the market has already gone through a bear market in a lot of areas of the markets. There's a lot of areas, especially in technology, that have been really beaten up, especially in communications, other areas. These stocks have been really beaten up. we talked about before is that in 2020, we're talking about nobody wanted to buy energy, so it's probably a good time to buy energy. Now everybody wants to buy, the inflation stocks. Now that trade looks to maybe be topping. So where's money rotate to next? And that's kind of the big problem is where is this next rotation? Are we about to move from the inflation trade back to the deflation trade? Is the peak of inflation now behind us? And is now the time to start looking at moving more towards that deflationary trade as we get later into the year? A lot of people are talking about stagflation, which is low economic growth with high inflation. That doesn't last very long. You really can't have stagflation for very long. And the reason is that the inflation kills consumption. Consumption leads to slower economic growth. So you temporarily have this high inflation measure with slowing economic growth. So it seems like you have stagflation. But the longer that goes on, the more drag you have on the supply-demand imbalance, demand underperforming the supply, and prices fall. So eventually, stagflation becomes deflation until inflation catches up with lower rates of economic growth. And that's just the history of it all. There's a very high correlation historically between inflation and economic growth, as it should be. Interest rates follow suit. So the outcome of stagflation might be temporary, but the real problem as we get into 2022, late 2022, 2023 is going to be slow economic to recessionary growth. And what performs well in that environment will be bonds. And that's the whole kind of crux of the article today that's on the website. So when we come back from the break, we'll wrap up the show. A couple other quick topics here. Get you on your way for the day. I'm your host, Lance Roberts. Get by the website, realinvestmentadvice.com. Our blog post on why the bull market in bonds is coming back with a vengeance on the website now, realinvestmentadvice.com. Don't go away.
Daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
How do the richest people of the world invest and protect their families? Richard Rosso and Danny Ratliff's next virtual Lunch and Learn on the truth about life insurance will show you how to insure your income, minimize your taxes, and protect your real estate. Thursday, May 12th at noon. The most important insurance policy you'll ever own is the one you'll have when you die. Register now for the Truth About Life Insurance Lunch and Learn at realinvestmentadvice.com. The truth about life insurance with Ratliff and Rosso. Realinvestmentadvice.com.
What worries you about your money? Enhance your financial success with RIA Advisors' free financial planning tool, MyBlocks. It's our online modular manager for your money and your life. Does your vision of retirement match up to reality? MyBlocks can help to determine how much you'll need and how you can achieve. Create your own personal financial vision for the next decade with MyBlocks, our free tool at RIAadvisors.com. Click on the Client Portal tab, RIAadvisors.com.
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. RealInvestmentAdvice.com. Click on the Insurance tab.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
And welcome back to the show. So there's a new Nicolas Cage movie coming out.
Oh?
Yeah, you know, he did the whole thing about National Treasure.
National Treasure, yes.
Right? And had the sequel to that where he stole the Constitution. So there's a new script in the works. According to a group of treasure hunters, they are suing the Department of Justice over several tons of buried Civil War-era gold that they claim the FBI may have found and absconded with. The haul was supposedly lost or stolen during the 1863 Battle of Gettysburg. The gold was apparently on the way to the Philadelphia Mint and got lost. And according to Finders Keepers, which is the treasure hunting group that has been searching for this gold for years, they said that they had led the FBI to a specific area, 135 miles northeast of Pittsburgh, where they say their instruments had detected a large hunk of metal. According to the CBS report, the FBI's contractor said they detected a 9-ton metallic mass suggestive of gold. Finders Keepers accompanied the FBI to the dig site where they were confined to their car during the dig, and then the gold magically disappeared. And the FBI is saying, "We didn't find anything." Oh, no. The Department of Justice says there's 1,000 photos and 2,400 pages of records that they will turn over in 500-page tranches starting at the end of May. But the videos have mysteriously disappeared.
Really?
Yeah. You know, there's one thing that has become a very common truth of our government over the course of the last, few years in particular. Mm-hmm. They lose a lot of crap.
Stuff disappears.
Yeah, there's a like, right? Yeah, it's like, you're supposed to be preserving these records like, don't know, all those hard drives just magically got wiped.
Money,
or disappeared.
People.
Yeah.
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 Where's Bob?
I don't know.
Disappeared.
Bob who? Yeah. No Bob here. No conspiracy theory.
None whatsoever.
Just suggestive that there's some really lax record keeping in our government when you supposedly are they're supposed to be responsible for it.
Except at the IRS.
No, remember during the whole tax record investigation where the FBI was going after conservative groups.
Oh, yeah.
They got the lawsuit and then all those hard drives magically disappeared.
Well, that was selective.
Yeah.
But
just
if it
those.
was you or me,
yeah,
they got every piece.
Absolutely. But yeah, the ones they didn't want found, right? Yeah, those all magically disappeared.
Poof.
Drilled. Discarded.
Recycled.
Yeah, they'll turn up with the Kennedy records eventually. Other strange news out this morning. A Harvard astrophysicist says that alien tech crashed into the Pacific Ocean. Now, there was a object that did crash into the ocean. It was determined to be a meteorite. But he's convinced that it is actually alien technology, and he wants to go dig for it, or dive for it, I should say, because his whole goal in life is to push buttons on some alien technology. That's what he wants to do. Just push some buttons. That may not work out very well for you.
No.
If you happen to find some alien technology, not sure I'd just go plank around and pushing some buttons, considering you can't read the language, right?
Right.
Self-destruct. Anyway, get ready to wrap up here. The stupidity of government never ceases to amaze one. The reason that we have the problem right now in the economy in terms of inflation is because we printed $5 trillion worth of money and we sent it directly to households. And individuals went and spent that money, creating a inflationary push of demand exceeding supply, that we now have these inflationary pressures. So you have to wonder just how stupid the monetary and fiscal authorities are globally. According to the Nikkei, Japan plans to spend 6.2 trillion yen, that's about $48.2 billion, on gas subsidies, low-interest loans, and cash assistance to alleviate the pain of consumers and small businesses facing rising prices, which were caused by massive government spending. So we're going to solve the inflation problem by doing exactly what caused inflation to start with. Makes complete sense. And this is and that's Japan, right? But we're doing the same thing here. We are trying to figure out ways to allow people to continue to spend money, which is causing the inflationary pressure to remain. For instance, one of the things that we did during the pandemic shutdown is that we gave people all this money and we said, okay, here's money for you to spend, but guess what? You don't have to pay your mortgage payment, your rent payment, etc. We're going to put a moratorium on rent payments. So you don't have to pay your rent, which gave people even more money to spend because now I don't have to pay my rent. We're still trying to do that stuff now because we're saying, okay, well, don't worry about paying back your student loan debt. We talked about that yesterday. You know, the whole student loan forgiveness debacle is just a mess. And I did a news interview here just recently talking about that very thing. Is that, you know, the things that we are doing in the name of trying to help people actually hurts them longer term, because we don't think through the unintended consequences. One of the great lines just recently from the IMF was, well, maybe we printed too much money. No kidding. But this was this whole idea of modern monetary theory, which, you know, we have been talking about for years, that, you know, it's neither modern monetary or a theory, and that trying to use modern monetary theory to support economic growth was going to have very dismal outcomes. And, well, here you go. It didn't take a rocket science to figure out that if you send money into the economy, you're going to get inflationary pressures, which is going to hurt people. I wrote an article shortly after we began doing a lot of these monetary interventions, and there was a comment right after Joe Biden got elected that his policies, another $1.4 trillion of money being sent to households, was going to lift 40% of Americans out of poverty. And I said, yeah, it'll lift them out of poverty for exactly 1 year until that inflation hits. And guess what? They're all back in poverty again and struggling to make ends meet. It was just simply the reality of what was going to happen. And it didn't take, you know, a PhD economist to figure out that that was going to be the outcome of sending money into an economy that had been shut down from activity. And now you have the consequence. So the problem now is that, and this is what Japan's going to try to do, and we're going to try to do the same thing ultimately. You just wait and watch. Is that, well, printing money caused inflation, so let's print more money to solve the inflation problem by giving people more money to spend so they can pay for the stuff that's overpriced. The government frames the economic package to be compiled as early as Tuesday as comprehensive relief measures, but critics, at least those who refuse or fail to see the real monetary elephant in the room, see them as a short-term remedy, especially as other countries tackle more fundamental changes on energy and other key economic factors in response to Russia invasion of Ukraine. But here's the kicker. To pay for the package, the government will request 2.7 trillion yen under the supplementary fiscal 2022 budget to be drafted by the end of the current parliamentary session. It will secure another 1.5 trillion yen from its own reserves funds. Together with private sector contributions, the entire package expected to total 13.2 trillion yen. The largest portion of the government spending will fund the response to surging oil prices. To limit the increase in gasoline prices, the government will raise its maximum subsidy to oil distributors to 35 yen per liter from 25 yen. The new package includes about 2 trillion yen in measures. So the point about this is that here's a country, and if you want to know, and this is another big reason for our bullish stance on bonds, Japan can't have interest rates much above zero because they can't support it. And now they're going to issue more debt to do this, and they have to keep those interest rates near zero. So if you want to know ultimately where the 10-year Treasury rate is going, it's going to zero. There's a very long-term correlation between the Japanese JGB and the 10-year Treasury note. And we're eventually heading down to the same level as the Japanese JGB. And this is because of the debt, ultimately. One of the big problems that the U.S. has right now on a budgetary basis is rising interest rates, because that's increasing the amount of money we have to spend on servicing interest and servicing debt. So eventually, in order to continue to fund government programs, government operations, the pressure to push rates lower will continue. But the debt itself is deflationary, and eventually we wind up back right where we started. All right, wraps up the show for the day. Have a great day. See you back here tomorrow for the Wednesday edition. Get by the website, realinvestmentadvice.com. Our primer on why the bull market in bonds is coming back on the website now, realinvestmentadvice.com. See you back here tomorrow. Stick around. 3 minutes on markets and money coming right up.
Always Sunday in the rich man's world. All the things I could do if I had a little money. It's a rich man's world. It's a rich man's world.